You talk to banks all the time, right? And
They do.
you're trying to get them to get their customers to use
Sure.
you.
Sure.
What's their reaction to that? What is that? How does that play out?
I think a lot of lenders, I mean, some lenders get it, some lenders don't. The reality is, a lender should look at this as a credit enhancement. All it does, it strengthens the paper that they're lending against. Now, I'm not a banker, okay, but if I'm lending on inventory and receivables as a bank, I probably want the inventory insured, especially if I'm advancing money on it, right? In case the building burns up and
Right.
all the widgets that were in the building all of a sudden are no longer there. You want to have the ability to collect from an insurance carrier. Well, on the receivables, there is no insurance, right? And
Yeah.
so the collectability just depends on the borrower's ability to collect and the debtor's ability to pay. And so by us ensuring that, I mean, we're a AA rated company. And so we essentially turn that receivables paper into AA rated paper, the
Right.
strongest paper you can lend against. And there's no cost to the bank. So it's a credit enhancement. So, like I said, some lenders get it. Some lenders introduce it to their clients and say, I think you should really look at this. But in my opinion, even if the borrower didn't need it from an availability standpoint, I feel like it's probably a good idea to make the introduction because we help companies grow.
Yeah.
We help companies grow. We help them become more efficient. We help them safely grow, which are all good things for the lender. It's lending them money, more deposit accounts, all of those other ancillary services that they sell outside or that they provide outside of just a line of credit.
Yeah.
So and people trust their bankers. That's the cost of money sometimes can be commoditized. Well, if my lender is introducing to me to solutions like this to help my company
Right.
grow, well, maybe I'm not going to be as likely to move my bank line whenever somebody gives me a little bit more aggressive of a rate
Yeah.
because that guy's really helped my business out.
And you had a really good example with an energy company around here that
Sure.
you went to their bank 8 months before. I'll
Yeah.
let you tell the story.
Yeah, so I did a presentation for a lender locally here, group of bankers, and talked to them about the benefits of this type of coverage for their borrowers, on how we help the borrowers out outside of the banking piece. And oh, by the way, how most lenders look at this type of policy, and how it enables them to be more aggressive with how they lend to their borrower. And and they conceptually understand it. And sometimes bankers get it, sometimes they don't. And 8 months later, a client comes to me and they're looking at a policy for pure risk mitigation purposes and sales expansion purposes. And we end up writing them a sizable policy. And I'm like, well, who do you guys bank with? And they told me, and I was like, I just did a presentation with those guys 8 months ago. And they said, yeah, well, we're going to take this policy to them, and in hopes that they increase our size of our borrowing base and increase our advance rates and so forth. And at that time, that lender was very restrictive with their largest customer, and we're talking I don't want to be specific, but we're talking in the millions of dollars.
Yeah.
The lender was cutting out of the
Tens of millions.
tens of millions of dollars that the lender could have been lending on. But they were very restricted because the size of the exposure. Well, we were able to cover the size of that exposure. And so their hopes were that they're going to go back to the lender and say, hey, we need you to bump up your advance rates on these guys because this is now insured and there's
And it benefits them both.